Good morning, everyone. Welcome to Windsor Brokers live daily market outlook for Monday, 29th of October 2012. The top story, of course, is the Hurricane Sandy in the United States that is already starting to cause troubles, though the main hit to the East Coast is expected sometime late today. The Sandy, which could become the largest storm ever hit the United States, is set to bring much of the East Coast, including New York and Washington, to a virtual standstill in the next few days with the battering winds, flooding, and the risk of widespread power outages. About 50 million people are in the path of the massive storm, which has already killed 66 people in the Caribbean and expected to hit its U.S. eastern seaboard late today or early morning on Tuesday. While the storm does not pack the punch of Hurricane Katrina, which devastated New Orleans in 2005, forecasters said it could be the largest in size when it strikes land. Sandy's winds stretched some 520 miles, 835 kilometers from the storm's eye, meteorologists said. The New York and other cities and towns closed their transit system and schools and ordered the residents of low-lying areas to evacuate before a storm surge that could reach as high as 11 feet, approximately 3.4 meters. Some of the U.S. markets will be closed, such as the stock market, and possibly on Tuesday. The operator of New York Stock Exchange announced yesterday. The news that we have is that equities will close at early hours of today, early hours of United States time, 8:15 Chicago time, as well as NYMEX that has already been evacuated. With the more information will be given to us through the CME's website, and then of course we will forward it to you. So far as I can see, the markets are still working, but most likely later during the day some of them will be shut due to the hurricane. The week starts with the fresh strength of the US dollar as continuation of the previous week movements, as single currencies again below 129 as psychological support following last Friday's brief break below that hit 128.80, something like this levels, and then a brief recovery managed to stay capped at approximately 129.40 zone, and the fresh weakness is now threatening further extension lower as a loss firm break below 129 is risking again test of the key near-term support zone at 128.30, 128, where we have the 200 days moving average and the double bottom of 128, 128.25. With sterling losing 161 handle on a corrective movement from 161.42 last week's peak, with a quite negative tone still seen on the near term, seeing more risk towards the downside, more retracement of the current of the past weeks. Today's rally from 159.11. The dollar yen is at the back foot in the near-term corrective action, currently congested between 79.50 and 79.70, as the previous strong support now reverted to resistance. So far capped the corrective action of 79.50 with the still rather negative tone seen on the near-term studies. I would say at this point more risk is for a further extension lower. We should be watching 79.50.40 as a good support, loss of which definitely would be a trigger for some stronger corrective action. From the other side, dollar is again gaining strength as dollar Swiss surges on European opening, aiming towards last Friday's peak at 93.85, where the pair briefly tested the 200 days moving average. We have the quite good barrier at 93.85, 94.00, a break of which is to confirm, and probably today's close above 200 days moving average, and the 94 barrier to confirm the near-term bulls are in play, and the test of key barrier 94.36, 94.30 double top, as the brief correction of last Friday's peak at 93.85 was held by ascending 55 days exponential moving average at 1093.40 zone. Commodities remain in the near-term consolidative mode. Crude oil moves still holding above 85 level, but congestion is seen between 85 and 85, 86. I would say 86.50 with the near-term tone still skewed towards the downside. The overall picture is still quite bearish, and the daily studies are firmly in the negative territory and pointing lower, seeing risk of further retracement. Of course, more of this we'll have it on our technical part. Also, the gold found some ground at 1700 psychological support, but still unable to make any significant move higher, as the corrective action is so far being capped at 1720. This is our initial barrier. As said, apart from the hurricane that is the top story for today, we also have some comments from Eurozone, that some information say that Eurozone finance ministers would discuss the Greek bailout on October 31st. According to the sources close to Eurogroup, finance ministers will hold a video conference on Thursday, during which they will decide whether it is possible to release the next tranche aid for Greece, amounting to 35 billion euros. It's expected that the payment should be approved without problems, as the Troika has agreed this week not to only unblock it, but also to extend the deadline by which Greece has to meet the deficit target by 2 years. The ECB board member Jörg Asmussen commented on the central bank's bond purchase program on last Friday, saying that if EU member states request bailout, it doesn't automatically activate the bond buying. He also explained that after a bailout request is submitted, it needs to be first analyzed by ESM. The ECB steps in only when all the conditions required by the rescue fund are fulfilled, and then evaluates if a central bank intervention is needed and how long should it last. From Spain, again, quite negative news that came last Friday. Unemployment hits a record high in third quarter, surging to 25%, following a 24.63 recorded in the previous quarter. This is, in any case, this result is slightly more positive than the expected that was seen at 25.10. The total number of unemployed in Spain reaches 5,778,000 after 85,000 people were left without work in the third quarter, and 49 jobs were shed from the public sector, and 47,600 from the private sector. Following the release of the unemployment numbers, the Spanish risk premium rose to 411 points, while the 10-year bond yields reached 5.66%. From today's calendar, we have some data from the UK starting at 9:30 GMT. Just a reminder that for those that are in Europe or in Cyprus time zone, we are now back to the winter time, and the difference between GMT and our local time is now 2 hours instead of 3 in the summer. Also, the European time comes GMT plus 1. So 9:30 is net lending to individuals from UK September release increased by 0.6 billion compared to draw of 0.4 billion in August is forecasted for today. M4 money supplies forecasted at 0.4% compared to 0.2% in August, and mortgage approvals are seen slightly higher, 49,000 in September compared to 48,000 in the month of August. United States start at 12:30 GMT. Now this again depends on the weather conditions in the United States, as most of the institutions will be closed. We'll see whether they will do the release, or it's going to be postponed. Core PCI price index for September 0.10 unchanged to the previous one. Personal spending is slight improvement, 0.6% in September compared to 0.5 in month of August, and personal income more improvements in according to the forecast at 0.5% compared to August 0.1%, and the data that come will be already in the next day from Japan. But we should mention household spending and unemployment rate at 4.2% compared to 4%. I do apologize for the mistake in the calendar due to some technical problems. Industrial production also minus 3.1%. I don't have the real figure here. I cannot figure out. Anyway, to finish with today's calendar, we're going to move to the currencies and the commodities and see what are the expectations for today for majors and commodities. As said, the single currency, if you see the screen, yes, you can see it, remains at the back foot at the opening of European session. A brief break on last Friday that dipped to 128.81 was followed by a mild correction, 129.50, descending 55 days moving average on the hourly chart capped the upside, and now fresh weakness slide below 129 sees risk of further extension lower, as the all indicators on 1 hour chart are pointing lower, similar with the 4 hour chart, as the pair now tests the lower Bollinger Band on the 4 hour chart. A break below 128.81 last Friday's low will signal the firm break below 129 and probably open way for a test of basically the 128.90 is also the pair is currently attempting through the trend line support 128.93. This is the main bull trend line of 120.42, and then we have the another very important supports. 128.39 is the 200 days moving average and the double bottom of 1st and 11th of October 2012, 128 to 128.25. Basically we have a quite strong support zone above 128. This is also daily lower Bollinger Band. A break of this currently congestion, as the downside has been kept protected by these levels, would signal major reversal of the larger 120.42 to 131.70 rally, and most likely will signal a double top at 131.70, 131.38. That would be quite bearish for the single currency, with the close below 128.33. That is 200 days moving average, and the below 128 to confirm the near-term negative stance and keep the upside targets at 131.38 and 131.70 out of reach for now. The British pound extends its corrective action of the latest rally from 159.11 that peaked at 161.42, 161.40, with the pair retracing approximately 23 nearly 38.2% on the latest slide through initial support at approximately 160.70. Now the pair reached 60.57, just ahead of 38.2%, with the hourly studies now sliding into the negative territory and the price holding below the moving averages of 10 and 20 days, more focusing towards the downside. 4-hour structure is now attacking the 55 days exponential moving average at 160.63, a break of which to refocus lower levels. I would say the main risk would be seen on a loss of important support at 160.00. This is approximately 61.8% retracement of the entire rally, and that will signal lower top as we can see on the daily chart. The main bear trend line of 163.08 so far capped the upside. Attempts brief breaks higher proved to be false, with the extension below 160 required to confirm and refocus downside the important support at 159.00 zone. That also marks 38.2% retracement of the larger 152.67 to 163.08 rally below which we have 158.33, the 200 days moving average. Dollar yen near-term congestion seen between 78.50 and 78.70. Previous strong support zone at 78.70. So far now reverted to resistance. Managed to cap the upside 79.74. Brief break seen so far, with the immediate action seen on the European opening aiming again towards the downside. Initial support at 79.50 comes under pressure as the pair extends to 79.53, just testing the recent lows. Where is the 55 days exponential moving average on the 4-hour chart that currently moves sideways, while the 20 days one is already pointing lower, and all indicators are in the down move. That increases risk of further extension lower. We need to see the break below 79.50, 79.44. That is 38.2% retracement in order to confirm the corrective action and open way towards 50% at 79.16 and 79.00, seen as a psychological support. Risk, near-term risk will be seen on loss of 79. That will confirm a temporary top at 80.37 last Friday's peak, and open way for further easing. Conversely, any ability to hold above initial 79.50, which is seen as a quite good support, 79.40-50 zone. However, quite a negative tone still seen on the 1 and 4 hour charts. Do not rule out further easing, but ability to hold above 79 would still keep the near-term structure of the latest rally of 77.94 in play for possible retest of 80.00 and 80.37. That will open way for 80.65 peak of 25th of June, also 50% retracement of the larger 84.17 to 77.12 down move. As we can see also on the daily chart at 79.48, where is the 200 days moving average. It's a very good support, and so far containing the current reversal. Ideally, as I said previously, ideal reversal should occur at these levels, 79.40-50, to keep immediate bullish structure in play for a possible fresh attack at the 80.37 and the 80.65, with regain, of course, of psychological 80.00 level required as the first step. With the dollar Swiss gaining ground on the European opening, a fresh attack towards upper levels seen off the near-term base at 93.40, where the current the near-term support reversal of 93.85 last Friday's peak found the support. It was contained by ascending 55 days exponential moving average. Immediate focus is seen at 93.85. That is also 200 days moving average, and also the 23.6 approximately retracement of the larger descent from 99.70 to 92.13, a break of which, and more significant, 94.30-36 double top is required, also reinforced by descending 55 days moving average is seen required to signal stronger recovery, and confirm base at 92.37, 92.13 for a possible stronger recovery. At this point, daily structure still shows some more bearish moments, as crossover of 50 over 90 days moving average, and that are both descending, with the 200 days one moving in the sideways mode. Indicators still in the negative territory. Still sees the risk of upside failure on approach to 94.30-36. That will see potential for further congestion and further, I would say, rather sideways trading with the range defined at 92.13 on the downside and 94.30 at the upside. Clear break above 94.36 is, as said, to open way higher, while failure to clear these levels sees the further congestion. Situation on the lower time frames, positive tone seen on the 4 hour chart. with the hourlies also pointing higher now and fresh momentum being regained on the hourly chart. Seeing potential now for test of initial barrier at 93.85. So we'll be focusing basically 93.85, 94.00 in the near term, a break of which is to open next barriers at 94.30 and 36, our initial upside targets. And the set for the crude oil remains now in the sideways movements, congestion between some 150 points, still sees more risk towards the downside as hourly studies are rather neutral at this point, but 4-hour ones are still in the negative territory with the recent congestion seen as just a consolidation of the latest sharp down move from 93.50 that so far bottomed at 85 zone. Descending a 20 days exponential moving average on 4-hour chart maintains the current negative tone and caps the upside for now, as break below 85 level would risk further extension lower. 65 is the next. This is the higher platform of beginning of July 2012, and our projection of the third wave from 100.72. We have the now third wave projection is approximately at 80.50, seen on a break below 83.64. To provide the near-term relief, I would say at this point, regain of minimum 90.00 will be turning the focus higher. That also marks 61.8% retracement of the down move from 93.50 to 84.93 low, fresh low of 24th of October 2012. And finally, the yellow metal. Again, we have consolidative action, but the tone is slightly skewed towards the upside, as the yellow metal finds ground at 1700 psychological support. Initially brief break below, ticked at 1698, but still holding above this level, with upside now being congested at 1720, our initial barrier, and 23.6% approximately of down move from 1795 to 1698. At this point, we need to see break of minimum 1720, where it's also close to it. 1724 is the descending 55 days exponential moving average, in order to provide the near-term relief and open way for a stronger corrective action. 1735, approximately 36. That marks 38.2% retracement, will be seen as the next good barrier in case of break higher. Negative 4-hour studies, although pointing higher, with the hourlies now above their midlines, still see lack of momentum to clear initial 1720 barrier, and the most likely further sideways movements will be seen. Basically break above 1700 on the downside. Break below 1700 on the downside, or minimum 1720 on the upside, would give us some more hints of near-term direction for yellow metal. However, negative tone that dominates on the larger picture, as the pair retraces nearly 50% of the upleg from 1590 to 1795, with indicators now in the negative territory, still doesn't rule out any possible further extension lower. Break below 1700 and 1693, that is 50% retracement, is seen as a trigger for a further extension. Down we have cluster of supports between 1660 and 1670, starting with the 90 days moving average at 1671. 1668 is the 61.8% retracement, and the 200 days moving average currently at 1663, seen as downside targets in case of clear break below 1700. Conversely, a set regain of minimum 1720 is to open 1735, 38.2% retracement, while quite significant barrier lies at approximately 1750-60 zone, and the break of these levels would be seen as more supportive. We have 50 and 61.8% retracement of the down move, as well as a lower top of 17th of October 2012. That's all from my side for today, Monday 29th of October. Please, your questions, if you have any now, you can submit them. Regarding your question for the training webinars or learning courses, unfortunately nothing has been done yet, as company has the whole training program in the website. I'm aware of this. I just thought we could do it more in practicing, let's say. But you can go to our website and you will find it. If you are, of course, if you are a member, you have to become a member. Let me just show you how it works, if I'm very familiar with this. It's somewhere in education. No, this is not the one. I'm not sure now where it is. Online trading strategies, I think this is the one. You have to be a member of Bravo. This is the one. So you go to the education and then trading strategies. Of course, you have to have the login access. I suggest, this is what I discussed with my colleagues, that whoever is interested could go through these things, and then we can make the separate session where we'll be discussing and basically try to do it in practice, because theory is one thing, but practice is something else. So I suggest you go through all these comprehensive courses that are very good, and then once you read them all, then we can actually, you are listening and seeing the show, then we can make the session and do it in practice, recognize all the patterns, indicators, oscillators, how to use them, and all these things. If you are okay with this. Yes, it was. This was actually, the thing was planned, but then we got the change of the plan, because having all this in the website, it needs to be used in any case. Suggestion was that it's better if you go through all these things, and then as being more educated, let's say, then we can practice these things, which will be much easier for you, of course, and for me, as if I'll be talking to someone nearly equal to me regarding to the knowledge, then you will understand it faster, and we'll spend less time in doing things in practice and recognizing all these things in our charts. Any further questions, please? Okay, seems no questions for today. I would like to thank you, and just a reminder, keep an eye on the CME Globex instruments, that includes energies, precious metals, futures, currencies futures, and the equities, as they might close earlier today. We'll keep you informed about all events, whatever will happen in the United States. Just to be aware, you might face the closure. Of course, all information will be passed to you through the Windsor Brokers trading platform. Thank you again. Wish you a nice day, very successful and profitable trading, and expect to see you again tomorrow morning at the same time at 8 o'clock GMT. Thank you.